Okay, so in this video, I'll explain exactly what Wise Interest is, look at how it differs from a traditional savings account, show you exactly how to use it, look at the tax implications, and finally answer some of your questions from the comments. In a nutshell, Wise Interest gives you the ability to deposit your money into something known as a fund. A fund is simply a pool of money that's allocated for a specific purpose. They can vary in risk and your investment is not guaranteed. But in the case of Wise Interest, that risk is very low because the fund invests in government guaranteed assets. Right now, Wise Interest has funds available for pounds, euros, and dollars, although their availability may vary depending on whether you're in the UK or one of these European countries. The list of countries may have also been updated by the time you're watching this video, so I've linked below a page where you can check for yourself. While your money remains deposited in one of these funds, it earns an amount of interest that tracks the rate set by these central banks. For example, if we look at the British pound or sterling government liquidity fund, we can see that compared to the base rate, it has kept up nicely, and also compared to some traditional savings accounts, really led the charge on interest. This is the major benefit and guarantee of Wise Interest. As rates rise, so will the interest you earn. That's unlike savings accounts where the rate is at the discretion of the provider. And that's an important distinction to make because Wise Interest is definitely not a traditional savings account, although it does share some similarities. You may have heard of an instant access savings account. These allow you to deposit and withdraw money almost instantly. With Wise, the limit or time frame to accessing your money depends on your country. In Germany, Norway, and Sweden, you can only use Wise Interest for money that you have in a jar, and withdrawing money from jars can take up to 2 working days. In the UK, you can also have a savings jar set to earn interest, or you can do it with your main balance. Think of your main Wise balance as a current account. This is the default location for any money deposited into your account. That means if your main balance is switched to interest, you can still spend or send your money whenever you want, including any gains you earn. Although here it does mention that if markets were to become unstable, then you may not have access to all of your balance. Because after all, this is a fund, which is an investment product, and therefore it's at the behest of market volatility. I should also mention that Wise has a fund that invests in stocks and shares, but that only gives you instant access to 97% of your deposit. Just make sure to not confuse stocks with interest because you can easily switch your main balance or a jar to either one. I believe Board Sports Group, who asked me this question, may have confused the two because they were worried you would only be able to instantly withdraw up to 97%. But after checking with Wise support and also going through their terms and conditions, this applies to stocks only, and with interest, you should, bar any market volatility, be able to access all of your funds. Unlike traditional savings accounts, there are fees which are actually factored into the rate. The annual Wise fee is charged monthly, and the fund manager fee is included in the value of your investment, so you aren't directly charged. Paying a fee for this is certainly a notable difference to a savings account, and arguably a caveat. Although with interest rates constantly changing, you could make the case that these charges are inconsequential, as you at least have assurance that you'll receive a competitive and equitable rate. That's not to say you're guaranteed the best rate. In the UK, it certainly isn't. Just take this 5% instant access account. Right now for GBP, it's obviously greater than Wise, but it only pays annually, while Wise pays daily and updates at around 9 PM. It also has a maximum limit of 250,000, while Wise, as far as I can tell, doesn't have a limit on how much you can deposit. One similarity between savings accounts and Wise Interest is that you get FSCS protection. This means for those in the UK, you have deposit insurance up to £85,000. For those in the EEA, you will also receive cover for up to €20,000. It's important to note that this only applies to balances and jars that have been converted to Wise Interest. Regular balances or regular jars that are set to cash do not get deposit protection. I'll also link this article below because it is quite important, as it outlines exactly how your money is protected. The first thing you'll need to do is deposit money into your Wise account. Obviously, you're going to need an account to do that, so if you don't have one yet, then please consider using the link in the description box below to sign up. That's an affiliate link, so by using it, you'll be supporting myself and the channel. To deposit money, you'll need to select either the British pound, US dollar, or euro. Then you just select add and enter the amount of money you wish to deposit. If you click continue, you can then select the payment method. Now, I recommend doing a bank transfer either manually or by clicking simple bank transfer. This method is always free and your money should arrive within seconds. Once the money is deposited, you then have two options. Either convert your entire balance to Wise Interest or create a savings jar and switch that to interest. If you want to switch your main balance to earn interest so you can access the money instantly, then just click the currency, then beneath balance information, click cash, and then interest. To create a savings jar and earn interest, you need to go back to the currencies, swipe across and select open. Also, if you're doing this on desktop, it is practically the same process, just with a slightly different layout. Now we just select jar, then the currency, choose an icon, add a name, then choose the balance you want to add money from and enter the amount you wish to add. Finally, you just need to switch that jar to interest. To do this, select cash and then interest and go through the process of confirming the terms and conditions. It usually takes 1 working day for your money to be converted and Wise will notify you once it's done. After that, you'll start earning and you can check how much by selecting the jar or balance from within your account. You may have to pay tax if you use Wise Interest, and this will depend on the country you pay taxes in and whether you earn more than your personal allowance. Wise has this handy page that I've linked below that has tax guidance for each country that interest is available in. Obviously, I'm unable to provide tax advice, and this is purely for informational purposes only, but for those in the UK, you may have to pay capital gains tax if you move money out of your Wise Interest balance or jar through spending, sending, or just by simply moving money to another account. That's because this will trigger Wise to sell units in the fund, but in this scenario, you won't pay any capital gains tax if you fall within your free allowance. In the UK, as of the tax year for 2023 to 2024, that free allowance is £6,000. The same applies to income tax. You may have to pay that if you fall outside of your personal savings allowance. And remember, that includes any interest earned elsewhere, not just with Wise. You can also request a tax statement to help you complete your return, as the report will show you what you might need to declare from your use of Wise Interest. Definitely check out this page that I've linked below. It has some useful info on tax and also an example of when someone might be liable to pay both capital gains and income when using Wise. Okay, so let's answer some of the questions we've received in the comments. Okay, Wise Interest seems to be an investment type of account. What's the difference versus a typical savings account, and what if you're a US citizen abroad? I think we've outlined the differences quite well, but if you're a US citizen abroad, I'd first ask the question, what's the address you have registered with Wise? If it's in the US, then you probably don't have access to Wise Interest. But if you do and you pay taxes in the US, then you certainly need to look at the tax implications for investments. This is a fund, so potentially in the US, it would come under the category of capital gains. Can you explain a bit more about how the low risk fund works on Wise? Because from what I've seen, money grows at a slower pace. Well, firstly, the pace it grows at is based on the percentage rate. If that rate is greater than a savings account, it'll grow faster and vice versa. The fund has the lowest risk rating because it invests in government-backed loans. So basically, it uses your money to buy loans that are issued by the government, and it then earns money through the interest repayments on those loans. They also make agreements where they lend money and get valuable things in return to make sure they don't lose out if the borrower defaults and can't pay back the loan. Basically, it's designed to make sure any money invested in the fund does not decrease in value and is protected. So that's why it has such a low risk rating. Do you think it's dumb to keep your money in cash and not use interest? Personally, I don't see why, especially in this particular economic environment, you wouldn't have your balance set to interest. Not only do you get to earn interest, but in the UK, you also get FSCS protection and you can still access it instantly. Yes, there's risk, as I just mentioned, but it's very low, and unless interest rates rapidly decline to 0% or go negative, it's unlikely you'll lose value on your money. So setting your Wise balance to interest and not cash at least gives you the assurances that it should continue to gain and not just remain dormant. So yes, I think you could argue that it is dumb to keep your money in cash and not use interest. Let me know in the comments if you have any further questions for us, and if you do want to sign up, then please use the affiliate link below. I really hope you found the video useful. Do give it a thumbs up if you did, and to learn more about Wise and their great multi-currency account, then click here. And I'll see you in the next video. Goodbye.